All right, let's talk about closing costs. Jim Seagot here with Polaris Mortgage Planners at Axiom Mortgage Solutions. Closing costs are the costs that you incur when you are purchasing a property or selling a property at the time of funding or transaction of the purchase or sale. So with these closing costs, typically you're going to have an appraisal. Every property gets appraised whether you know it or not. So if you're putting less than 20% down, which is considered a high ratio mortgage, the default insurer, typically covers the cost of the appraisal unless it's going to be a private sale or a realtor is acting on for both parties. Sometimes they'll have an appraiser go in there, and sometimes they'll have the purchaser bear that cost. Now, when it comes to appraisals, they range from $250 to $325, and on conventional, when you're not putting less than 20% down, when you're putting 20% or more down, typically you would be the one responsible for paying that fee for the appraisal. All right. Now, home inspections. A lot of people want to get home inspections when they buy a property, and they want to make sure that the property is in good shape and there's nothing wrong with anything, or if there is, they can negotiate with the seller to make sure it gets fixed, or maybe reduce the cost of the purchase so that the purchaser can cover it when they move in. Now, those home inspections are usually between $500 and $600. Lawyer fees would be another one. So when you're using a lawyer to do the purchase and the sale, usually on the purchase side it's $1,200 to $1,800, and there's disbursements as well, so all the paperwork involved and title transfer of the title and stuff to the purchaser, all that stuff has some fees to it. So you get a call for a quote if you want with a lawyer, and they typically, when you go in to bring the rest of your down payment and meet with a lawyer, they'll tack on their fee and everything on that monies that you bring in. And they'll usually buffer it a little bit to make sure that they have enough money for any kind of outstanding fees that they didn't anticipate on closing. And then once everything's done and paid, then they'll write you back a check a few weeks to a month after you take possession of the property. A couple other things that the lawyer is going to be calculating would be the property tax adjustment. So when you buy a property taxes are usually due June 30th of the year, so the middle of the year, and they pay back to the beginning of the year, to January, and to the end of the year, to December. So if you have somebody who you're buying a place, let's say before June, so let's say the end of March, so that seller has been there for 3 months, but they haven't necessarily paid for the taxes yet. Maybe they have, maybe they've paid monthly, and then they would already have paid the taxes. So, but let's say they paid June 30th and they haven't paid yet. They've been living there for 3 months, and so they owe you 3 months of property taxes. So then the lawyer will figure that out and make sure you get credited for that. Now, if it's after June 30th, let's say it's in October, so they've paid for 9 months to the end of September, and you will owe them or they would have paid for the full year, and you would owe them for October, November, December for the last 3 months, right? So then the lawyer will make that adjustment. So that's tax adjustment. Condo fees, if you're moving in, depending on when you are moving in the month, condo fees would be due if you're buying a condo, so they would make sure the adjustment for that. And sometimes there's an estoppel certificate with the condo to make sure they know what's owed for the condo fees and such, and if there's anything else outstanding. And usually the estoppel will get that fee will get charged to the seller. Sometimes the lender wants title insurance, so title insurance will protect the lender of anything that's incorrect on the title, or sometimes with the property, certain issues with encumbrances of land use and that on the property. Especially if there isn't a real property report, then they're for sure going to want title insurance to protect them. So that is usually, I think, around $150 or so, depending on the title insurer. So that will get tacked onto your cost. For some provinces, most provinces besides, I believe, Alberta and Saskatchewan, a lot of them have land transfer tax. So there's a land transfer tax fee for those provinces that you might have to bear. And for people who are selling, if they don't have a real property report, an RPR, then that's a cost that they might need to get or update their RPR if they've done some improvements to the building, outside of the building and yard, and they have permanent structures out there, fences and stuff like that. Then a real property report needs to show where everything is and make sure it's all in the right boundaries and distances that they're supposed to be, in guidance with the land use of that municipality. So, and that's, I think they're usually around about $700 or so for an RPR. So those are some of the closing costs, but for sure, on high ratio, you can expect the lawyer fee and the property tax adjustments. And if you want to do a home inspection, that cost. And then if you're conventional, you can most likely tack on the appraisal cost. And then if it's a condo, some condo fees, and probably also maybe title insurance depending on the lender. All right, that's it. Jim Secott here with Polaris Mortgage Planners at Axiom Mortgage Solutions. Call me if you have any questions.